What's going on, team? It's Caddy with Money Investing. So thank you so much for joining in. I figured I'd go live for about an hour, maybe 2 hours. We'll see how long this goes. What's up, Stock Crib? Welcome to have you on board. So the futures are down, unfortunately. The NASDAQ down about 74 basis points, so trading as low as 12,570. So I figured I'd go live for a little bit. What's up, Lori? What's up, Sir Smooth? What's up, everybody? Come on board. Thank you so much for joining in. I really appreciate that. What's up, Ferdine? What's up, No Break? Thank you so much for joining. Welcome. What's up from Cali? JC, shout out to you. So yeah, the futures market are open. The NASDAQ is down a little bit more than the S&P. So let's take a look at the S&P 500 futures. So the S&P is down about 11 basis points. They were somewhat in the green early on, but we did sell off. So if I go over to the 5-minute chart, you guys will notice that we have been selling off since we opened, right? So this is where we opened at 6 p.m. and we have been down a little bit over 1.62%. So what's up, everybody? Thanks for joining in. I really appreciate that. Make sure that you drop a like. It really helps out with the channel and the algorithm. So definitely it pushes out the video to other people as well, so they can watch it as well. So thank you for joining. Newton, Cyril, I hope I'm pronouncing the names correctly. MK, what's up? Khalid, what's up? Thank you for joining. Venkat, thanks for joining. So yeah, down even with the stimulus news, so it's not looking good. Again, it may have been priced in to some extent when we were hitting new all-time highs. So Zach, yeah, the NASDAQ is down. It's not the perfect picture yet. Again, in my yesterday's video, I mentioned to everyone that we need to be cautiously optimistic, meaning that the buying volume that we saw back on Friday from like lows when we were doing a live stream, the NASDAQ and the S&P, they both rallied to new all-time high of day, right? So we ended the day on the green note, and they pushed up, and the volume was substantially higher. So that, to me, my gut tells me a little bit that we could see some recovery now. But again, I'm a little bit cautiously optimistic. I know it's a little contradicting, but it's the buying volume for the S&P and the NASDAQ, which suggests that there were buyers stepping in, and there was massive inverted hammer candle. Yes, Osman, you're absolutely right. So big short bets on the bond market. So the bond prices have been going down. In fact, I'm going to break down a article very soon, and that's what's causing the yields to go up. So if you were to look at the yields now, I think they're sitting still at 1.58, so they're up close to 1%. Maybe that's what the market is pricing in. So if you go over to this, they've been selling off as well. It's not like they've been on an uptrend intraday like they've been pushing up. The yields have been selling off as well. We were, trading as high as 1.6 roughly, 1.598. So they've been selling off. So yeah, I mean, Sunday futures, if they flip, again, they're not indicative of where the market's open exactly tomorrow. There is a good representation of what the market is thinking prior to the open, right? So again, the S&P is down about 11 basis points, and NASDAQ is down a little bit more, down about 71 basis points, so trading as low as 12,573. Now this right here is a chart that I broke down yesterday. It was a pretty interesting chart for us to look at. It really goes over how the markets have been reacting to different sectors. So every single letter that you guys see after the XL is going to be that specific industry, right? So these are select sector indices for the S&P 500. So XLK is going to be technology, XLY is consumer discretionary, we've got healthcare, we've got materials, industrial, we've got consumer communication services, XLF is financials, and all the way at the bottom, this right here, XLE is going to be energy, right? So a huge divergence between tech and energy, right? This is coming back from February 2017. So almost about 4 years ago, when tech was obviously leading, it's been at 164%, and energy was down about 30%. Now moving forward, you guys will notice that if I were to kind of bring it up, energy is starting to creep up higher, and this right here is a huge push higher for energy, up over 80% since November. And XLF Financials is the second best sector, is up over 36%, and then tech is only up close to 11%, right? If you go even further, you'll notice that energy up over 38, financials up over 15%, and now tech is basically break even or down in negative. And so is utilities, so is consumer discretionary. So consumer discretionary has Tesla, Amazon in them as well. And then we've had utilities, we've got materials, and all those other sectors as well. Healthcare is also down in about 3%. So energy and financials leading the way. There's absolutely no doubt about that. And then if you were to look at the U.S. oil, that just hit a new record. I mean, not a record, but it's hitting as high as $70 a barrel, like almost 70 barrels. Like it's up over 2%. And this right here was one of the reasons why we did see some type of a push higher. So basically, in escalation of attacks on oil, Saudi Arabia's most protective oil facility came under fire on Sunday. So this was actually over the weekend. So this could potentially lead to the energy sector again pushing higher, having a solid green week, right? That could lead for the S&P 500 to maybe either close flat or even close green. But the Nasdaq again would potentially take another hit. So sending oil prices above $70 a barrel. But the missile and drone barrage didn't cause loss of life or property. According to Saudi Energy Ministry, Yemen had claimed a series of attacks on Sunday, including one on Saudi Aramco facility at Ras Tanura, which is the world's largest oil terminal, capable of exporting roughly 6.5 million barrels a day. So this basically what happens. What exactly happened here with this oil attack, right? They basically cut the supply. If you're attacking a property that is exporting or has the ability to export 6.5 million barrels a day, nearly 7% of current oil demand, the Saudis have raised prices for its crude for shipment to Asia and the US next month for after OPEC plus extended oil supply constraints, pointing to tightening physical market. So that's basically what's happening, right? So they basically, when we had the OPEC meeting on Thursday, they basically said that the supply is going to stay unchanged. That helped the oil prices, and now this happened on Sunday. That's obviously going to help the oil prices, and hence when oil prices go up, the upstream business for these energy companies, ExxonMobil, Chevron, like this actually benefits them as well, because they're able to, it's like mining, right? So by mining gold, miners make a lot of money when gold prices go up. It's the same thing with energy companies. Oil is a big commodity for them. So it's up over 2% as of the time of this video. So I could expect this energy sector to continue to rip higher. I mean, Exxon, Chevron, like some of those other energy companies could potentially do even more. And then push up higher. And then, of course, with the yields, financials will do well. So I honestly think that there might be like one more week, roughly, this next week, that we could see some more weakness from the tech sector, from the Nasdaq. Of course, that's tech and healthcare heavy. And then S&P basically closing in either flat or pushing higher. It depends how much energy and financials push up, because again, tech has such a big influence on the S&P 500. So even if energy and financials continue to rip up higher, the gains are not going to outweigh the losses that we've been seeing for tech, right? So the S&P is also down because it's getting dragged down by tech. So yeah, I mean, the futures have been selling off. We're now down about 80 basis points, trading as low as 12,558. The S&P is now down in the red as well, down about 16 basis points as well. These right here are going to be some of the earnings. And I know there's going to be a lot of people excited about a lot of companies out there. I'm going to be personally watching XPeng. That's going to be this one right here. I'm going to be watching Car Parts maybe, and then Shift Technologies, Stitch Fix. I know that a lot of people are going to be interested in those 3 or 4 companies right here. Is ChargePoint reporting as well? I don't see them on this chart, but I did see somebody commenting that ChargePoint is also reporting their earnings. If you guys have more information, let me know in the live stream. But on Monday, we pretty much have XPeng, we have Wish, Stitch Fix, and Shift Technologies. And other than that, if there's any other companies that you guys are interested in, let me know and I will highlight that. But for the most part, those are going to be 3 to 4 companies that I'll personally be watching. Then on Tuesday, we've got Dick's Sporting Goods. We've got Sonos. I know that a lot of people will be interested in that one as well, although I'm not interested in that one. Johnny, yes, AMC is reporting on Wednesday, so very, very exciting. And then other than that, we've got Open Lending. Maybe I'll watch those earnings. We'll see how that company reports as well. But other than those on the Tuesday, that's about it. And then Wednesday, of course, we've got a pretty hectic schedule. We've got AMC reporting. We've got Tattooed Chef. So a lot of people are going to be watching those 2 companies. We've got Oracle and we've got Skills. So those are also going to be 2 companies that a lot of people will be very interested in watching as well. And then Lending Club, maybe. We'll see. And then Express. I know a lot of people are watching Express. And then that's about it on Wednesday. And then Thursday, we've got JD.com and DocuSign. 2 really important companies. I'll be watching DocuSign and I'll be watching Celsius. Because those are 2 companies that I'm actually considering taking a position. Celsius is a really, really strong brand. I'm still doing a lot of research on them. But DocuSign, without a doubt, as we more move towards digitization, it's going to be really, really interesting as well. And then we've got Microvision. That stock has also been selling off quite aggressively recently because of all this selling pressure coming in from the broader markets. And that's about it. Let's see. Ballard, Party City, Stone, Wheaton, nothing interesting there. And then Friday, there's nothing really there either. Where's Rolls Royce on this chart? Is Rolls Royce here? So those are going to be some of the companies that I will be watching. But let me know if there's any other companies you guys are watching on this as well. So yeah, let's take a look at Tesla and NIO and talk a little bit about them as well. The futures market, I want it to stabilize a little bit. We'll see where it kind of settles overnight and where we potentially are headed to the market open, to the pre-market and market open. So US oil, again, to give you guys a quick update, let's take a look at how many people we have watching. So we got 545 people. Guys, make sure that you drop that like button. Really helps out with the channel and the algorithm. So oil prices pushing up because there was a recent attack in Saudi Arabia. So they were hitting as high as $70 a barrel. So we could expect energy to push up higher once again. This right here is going to be a sector breakdown. Energy obviously ripping through the roof. Year to date up over 34-35% or probably even more. And the next LF is going to be financial sectors because of the rising yields, because bond prices have been extensively shorted. They're up over 18% because a lot of their debt products are tied to the long-term rates, the 10-year yields. So energy, financials, obviously the leading sectors, and it's really, really interesting. Did you guys actually watch Kathy Wood ARK Invest briefing over the weekend? She put out a video about 40 minutes long. I did 2 separate videos of my own, like quick summaries, in my opinion, part 1 and part 2. But did you guys get a chance to watch that? And if you did, which were the 2 sectors that she said were going to be the most disrupted in the future? Oh, Rolls Royce is March 11. That's good to know. Thank you for sharing. So which 2 sectors does she say that were going to be most disrupted in the future according to her? If you guys did get a chance to watch that video, or if you guys did get a chance to watch my video that I did, the summary and the opinions on that. Right, so yeah, very, very nice. So finance and energy was actually the 2 sectors that would be disrupted through electric vehicles and digital wallets. So those were the 2 things that she mentioned. Yep, financials and energy, you guys are absolutely right. Tech, fintech, yep, you're absolutely right. So these 2 sectors, and it was pretty interesting. If I were to kind of bring out my notes, it's going to be a very quick, Sheila, what's up? Welcome on board. These right here are going to be sort of like my notes that I took from that briefing. I'm going to quickly go over that because this stuff is really, really important. It's really interesting too for us to actually understand, how ARK Invest is thinking. I know they have been under a lot of pressure with a lot of different things, but talking quickly about interest rates, of course, this is going to be the 10-year yields have gone from 0.5% to 1.5% in about 2 months, like a pretty crazy return, or pretty crazy like increase in the bond market. This is not something that's normal. It's like a monumental move, like in the 10-year yields, right? That basically creates waves in the bond markets, and that's what we're seeing as a ripple effect in the equities market as well. So it has created a lot of risk aversion, or a risk-off behavior in the markets, right? And this is something that a lot of us, like as retail investors, may not understand fully because we're talking about 1.5% in the yields, right? Who would go after 1.5%? There's a lot of hedge funds, there's a lot of pension funds, there's a lot of retirement accounts that go off for that risk aversion or risk off for their portfolios because they're trying a lot to preserve their capital as well in an environment that could potentially have a lot of inflation in the future. So yes, it's pretty crazy for us to think that why would they go off for 1.5% return for the yields? Why not invest in equities when you can generate a much higher return? But that happens. That happens when valuations become a little bit overheated and you have the yields kind of competing with the equities market. You have the yields competing with the dividend yield of the S&P, the earnings yield of the S&P. That happens. There's a lot of money that they're managing. So 1.5%, when you look at the dollar amount, equates to a lot of money for them. So that creates a risk aversion, risk off behavior among a lot of institutional investors, and that's exactly what we're seeing. When we talk about inflation, Kathy would basically mention that there's going to be real growth that's going to pick up. This is actually happening this time around. It's not like we're going to lift lockdowns and everybody's going to, like the cases are going to spike, right? This time around, we've got actual vaccinations being distributed. There's case counts, death counts actually going down. So we are actually on our way to lifting lockdowns and reopening of the economy, which is going to lead to inflation eventually, because we have so much money supply, so much buying power, so much firepower in the checkings account, money market accounts. So there's a lot of cash sitting on the sidelines. Now, where that cash goes is going to determine the future of the economy, right? Whether it goes into the economy, whether it goes into the market, all that is going to determine where inflation sits and where the CPI sits. CPI is going to be the consumer price index. That takes into like a basket of commodities to be around 3 to 4% range. So actually, let me see if I have that from this arc. This is not it. I don't think this is it. I can't remember where I saved it, but basically CPI, she's expecting that to be around 3 to 4% range, and then that's going to trickle down to the inflation, which the Federal Reserve has also said to run modestly over 2%. So we'll see that where that ends up. The only thing that she's worried about in the future is going to be taxes. Taxes is something that she was worried about, and she basically says that increasing long-term capital gains and corporate tax increase is not good. But it shouldn't surprise the markets either, because that's something that we are kind of pricing in. So long-term capital gains, of course, when they go up, is going to be a problem. Corporate tax rates currently at 22%. If they go up, that's going to obviously hurt the EPS, the profitability of the companies as well. So that's going to be a bit of an issue moving forward as well. So that's the only thing that she's concerned about. But she's also saying that the closer that we can get to end of this year, going into next year, because next year, 2022, is going to be a congressional election year, when we are going to see, who is going to be the House, like between the Democrats and the Republicans. So the taxes may not be good in the future. So lower odds would be if you get to closer to end of this year, going into 2022, and have that midterm election to basically determine if determine who controls the House. So employment-wise, she said the employment report was good. 380,000 jobs added in February. 210,000 was the expectation, so definitely a huge surprise there. But there were more jobs coming in, so there were more positions created. But the average work week actually went down by 0.9%. So that was the only kind of catalyst that she saw, kind of offsetting the number of jobs added versus the income for the people, because the average work week actually went down for these people. So she thinks that we're still in a V-shaped recovery for employment and the labor market. Strategy-wise, there's a lot that we can go over strategy-wise in the market. If you guys want me to go over to the market and analyze some of those stocks, I can do that. Or if you guys are interested, we can actually go over this as well. So let me know in the live stream if you guys want me to go over to the strategy and the markets, or we can go over to the technical patterns, look at the futures market, and then break down some other stocks as well. So let me know what you guys are interested in. In the meantime, I'll just see how many people. So 800 people watching. Again, guys, make sure that you drop that like button. Really helps out with the channel. I really appreciate you guys. So let me know if you guys want me to go over this. There's videos that I've put out about this as well. So all right, look at the technical patterns. All right, we'll just look at the technical patterns for now, and then we'll kind of swing back to the report. And again, I've put videos on that as well, so you guys are more than welcome to watch. So the Nasdaq now down about 1%. The Nasdaq future is trading as low as 12,543. So we are pulling back quite substantially. Again, this is not indicative of where the market's open, but again, it's good to know that the markets are pricing in sort of like a gap down tomorrow and another red start to potentially the week. And the S&P is down about 23 basis points as well as of the time of this video, trading as low as 3,830. So this right here, quickly going over to the Qs. So that's going to be the QQQ ETF that tracks the S&P, the Nasdaq. 297 is going to be a really, really critical level of support. Now, even if you do gap down tomorrow, let's say 1%, we are still trading in this range, right? We're trading at close to $304, and we are potentially getting rejected at $309, $310. So that's going to be very, very important. Next week, I want you guys to watch these two levels for QQQs. I want you guys to watch 297 as an area of demand, and let's see if we can finish out the week with the Qs staying above that level, right? We want the Qs to stay above 297, $300. Because if you were to think about it, this already is a pretty healthy correction for the Nasdaq, right? We were down over 12% from all-time highs at one point on Friday when the Qs were trading as low as 297. That was a drop of over 12%. So this right here was the drop. So you guys will notice we were down substantially in a pretty healthy correction mode for the Nasdaq. Now, moving forward, we do need to make sure that the Qs stay above 297. And then for the NASDAQ, that's going to be roughly at around, I believe, this level at close to 12,400. Although my worst case target for the NASDAQ is at 11,800. For those of you who have been keeping up with the channel, you guys know that 11,800 is kind of like the worst case scenario. It's going to be a drop of over 16%, which again is very, very reasonable, very healthy and expected from the market, because this is not something that's new. This is something that we have seen over and over and over again. This right here was a drop of, I believe, close to over 12%. Or close to 14%. So 14% drop here for the Qs. This right here, another drop of over 10% here, and now we have come down 12%. So I know, and I was also watching an CNBC like a video that they posted with Jim Cramer, and he posted like 7 or 6 different, or maybe it was 5 different like stages of stock market sell-off, and he said that we're like in stage 1 of denial, which I thought was very interesting. But the market has already dropped 12%. Like, if you drop it another 8%, we're in a bear market. And he was basically saying that the stock market needs to drop another 7% in like a knee-jerk effect for the market sell-off to accelerate. Linus, thank you so much. I really appreciate the support. But I want your guys' thoughts on this too. And let me know in the live stream, right? He was basically saying that we're in stage 1, we're in denial, and the market needs to kind of pull back in one shot, like 7%, to accelerate that market sell-off. But Jim, if you drop another 7%, we're talking about a bear market, right? So what's going to happen here? Are we going to enter a bear market? In my opinion, we shouldn't. I mean, this is not something. Just thank you so much. I really appreciate that. I'll cover Square in just a second. Square, PayPal, I'm definitely going to go over in the near term as well. And thank you so much. Shout out to New York City. I've been there. I've lived there for 2 years. Thank you so much for that donation. I really appreciate that. And I'll go over Square in just a second. But 7% drop. If you do see that for the NASDAQ, I mean, that's going to really put us in a pretty ugly situation for the NASDAQ and the S&P, right? The S&P would then enter a correction territory. We're not quite there yet. But in my opinion, I mean, this is a very unique situation. The NASDAQ has corrected. The S&P has not, because of this chart, because of this is what we've been covering. The energy financials keeping the S&P higher. We're only down 6% from the highs. So that's what's keeping the S&P 500 higher and the NASDAQ dropping harder. So in my opinion, we're it's a tough situation. It's a very tough situation. In my opinion, I feel like there's going to be a strong recovery in the future, and we have to be cautiously optimistic on what could happen in the future. And if energy and financials keep pushing higher, I feel like the NASDAQ could drop another maybe 3 to 4%, and the worst case scenario, or like the price target that I have, is 11,800. But for the S&P, that could be maybe if financials and energy do not do well, the NASDAQ could outweigh, or tech and healthcare could outweigh those losses, and we could be down maybe 10% or 12% for the S&P. But next week, we need to watch 297 as a support. So that right there is going to be the support level that I want you guys to watch for the NASDAQ. And for the QQQ ETF, and then this right here is going to be the resistance. And if we do continue to trade in between this range, so if the NASDAQ ETF continues to kind of trade in between this range, then we are looking for some consolidation. That's good. That's really good. After the huge sell-off, we consolidate sideways, and then we make a move higher back to new all-time highs. That's what we want. We want stabilization of the prices. We don't want as much volatility as what we have seen in the past, right? So that's exactly what we want. Luca, thank you so much. I really appreciate that. I'll cover Apple, NIO, and Palantir as well. Do you think the NASDAQ will reach this 11,800 or 12,000? Can you please tell me Apple, NIO, or Palantir? So yeah, I'll cover that in just a second. And for the NASDAQ, like I said, the worst case scenario for myself, the price target that I'm estimating is going to be 11,800, which is very normal. And actually, let me go ahead and see if I have the... So this right here was kind of like my forecast. I do see that the S&P is gonna, so VIX, I'm estimating getting topped out at 40. Right now we're at 24, 25, and historically we've also gotten topped out at 40. The yields, I'm expecting them to get topped out at about 2%. That's going to be the lows from December 2019. Right now we're retesting lows from February 2020. So If the yields continue to push up higher, right now we did see a retest of 1.6. So that's another 40 basis point move. It's not small. In the bond market, it's not small. It's a pretty significant move and a very sizable increase. So I see the yields getting topped out at 2% and the NASDAQ, worst case scenario, kind of getting bottomed out at 11,800, correction of 16+%, and the S&P, bottoming out at 3,500 and a drop of 11%. Again, this is not guaranteed. This is not going to happen, depending on where the markets go, but this is just my estimate and my analysis of where it could happen, because the S&P much lower than the NASDAQ because of financials and energy, and it also depends where tech goes. Tech is very, very important to the markets right now and is basically going to determine where we are headed. So all right, so first one, we're going to break down Square very quickly. Square, in my opinion, trading anything under $200 is a strong buying opportunity for Square, without a doubt. And it was trading as low as 191, so that was pretty crazy to look at. But again, it basically came back down, so we blew the top off of this uptrending channel. So you guys will notice that we were kind of trading above, inside this higher high and higher low pattern, and we blew the top off for Square, so we were trading all the way as high as 280. So that's a $100 swing in a very small period of time. So that's incredibly how volatile the stock is, and it's down, or it was down, over 32%. So $200 somewhat getting validated here. So you'll notice that this is a support coming in from like January 27th, again a previous support, new support, and we kind of got validated here. Moving forward, I do see some recovery for Square. The RSI, the MACD, incredibly oversold. And there was a massive inverted hammer candle across the board. Like if you were to look at the NASDAQ, QQQ, the SPY, if you were to look at NIO, if you were to look at Tesla, if you were to look at Square, PayPal, Apple, Amazon, they all formed such a long wick, which is why I'm really inclined to think that this suggests a really, really strong sort of like buying or bulls kind of stepping in, because look at the volume. The volume, 24 million for Square, almost twice as much as the average Sunday volume, and you've got buying momentum coming in. Like you have so much buying pressure coming in for Square. So that basically goes to show that we could potentially see some bulls kind of stepping in, and there were investors saw that as a really good buying opportunity, because that's exactly what happened. All these stocks were trading as low as 191. NIO at one point was trading as low as 31. Tesla was trading as low as 540 at one point, right? So those are all okay. Thank you so much. I really appreciate that. So for Square, keep a close eye at $200 as the next support, and even watch 215, because that has also acted as a previous support here. So if I were to kind of highlight that, you'll notice that coming in from December 30th, we validated that support, and that has also acted as a previous sort of resistance. So for Square, actually I'm going to bring out that notepad for us to keep track of everything that we're watching, right? So we started with the Qs. Support is going to be sitting at 297, and the resistance is going to be sitting at 309 that we need to watch. For Square, support, there's going to be two supports, so 200 and 215, and then the resistance it needs to break out of is going to be 245 for us to see any more upside potential, and for us to, and then of course the moving averages, we've got the 21 and the 50 EMA. Philip, thank you so much, I really appreciate that. I'll go over Riot and SOS as well. Riot, I know I've covered that in the past as well, but I'll cover SOS as well. So 245 resistance to watch for Square, and then 215, $200 support levels. Anything under 200, in my opinion, is going to be a strong buy for Square, again, because we're moving more towards digital wallets. And I know in the short term, in the moment, it can seem like the world is falling apart. Square down over 30%, Tesla's down over 30%. If it can feel like these companies are not going to exist anymore, like they're going under or something, but that's just how the markets play mind games with you, right? It's, when everyone was buying these stocks higher, nobody thought of a potential correction, right? Because they were getting overvalued, and now they're just coming down to a more reasonable sort of P ratios, price to sales ratios, price to book values, so on and so forth. So that's something to consider for Square. Let me take a look at what other stocks were asked for. So let's take a look at Square. All right, so Square is done. Let's take a look at Apple, NIO, and Palantir. So Apple, we're going to go over very quickly. So Apple, to 120 acted as a really strong support. So if I go over to the, again, daily chart, that right there, 117, 120 is now starting to consolidate a little bit. And this, again, is very normal for Apple to do as well, right? So if we were to kind of, and if you've been keeping up with my channel since like September of last year in 2020, you guys will remember I put out a video going over how low Apple and Tesla could potentially go. And this right here was during the time when Apple was down over 25%, right? This is another time that we were I was personally averaging into these dips, and it was down 25%. Absolutely unfortunate time, like that 20 days, we're talking about that month of September, when Apple was consistently selling off, making lower highs and lower lows, and then it finally settled. It finally settled at 103. That right there is going to be the green rectangle. You guys will notice that Apple consolidated at that level, then started pushing higher, came back down in October. So September and October, they were both pretty rough months, and then rallied over all the way to new all-time highs at 145, ahead of great earnings. We've also had Daniel Ives on the show, kind of getting his perspective and analysis on the markets and Apple as well. And he's expecting, so again, he's reiterating his analysis, and he is basically, confirming his target. Apple to add another $1 trillion in market cap, although it could be at below $2 trillion at this point. So it's just slightly over $2 trillion. So we're talking another, 33-35% increase from current levels for Apple if you do see a push higher to a $3 trillion market cap. He has a base case target of 175 and a bull case target of 225 on Apple. So 175 base case, 225 is going to be the bull case target. And he's expecting Apple to announce, within 3 to 6 months, a potential partnership with another electric vehicle company, preferably Kia Hyundai, or VW, Volkswagen. So those are two companies that he is potentially looking forward to because of the battery technology. So very, very excited about that. For Apple, keep a close eye at, so for support, we're going to watch for Apple at 117. All the way as high as like 120. Those are going to be two support levels, and the resistance it needs to break out of is going to be 124. So that's going to be very, very important for Apple. And if 117 continues to get validated, if this level continues to get validated, $117, then I can make a solid case that 104 is going to be the same level as $117 now. So I hope you guys understand that this right here was a sell-off of 25%. Apple stabilized at 104 or 103 before pushing higher, and right now we are seeing a very similar drawdown, trading inside this downtrending channel, making lower highs and lower lows, and then consolidating sideways to potentially then push up higher once again. So next up, we're going to talk about quickly, we're gonna go over NIO. So NIO should be on a different chart. Let's go over this one. So NIO again has been selling off aggressively. It is down, close to 40 or 50%, right? It was down quite a bit from these highs. So last question, my average price is Apple 119, NIO 34, Palantir 22. So should I just sell tonight or wait for the dips? So Luca, although I can't really tell you exactly what to do, it's not my business to tell anybody what to do with their business. I'm not a financial investment advisor, but strictly, based on technicals and fundamentals, it really depends on the broader markets, right? If you think that the broader markets have more pain, especially the Nasdaq, because those stocks that you just mentioned are very Nasdaq heavy, then we could see some more downside. But in my strong opinion, I'm cautiously optimistic. Again, 11,800, even though it's my worst target, based on Friday's volume and the buying pressure that we saw, that does suggest that the Nasdaq has had a healthy correction, and we are potentially on our way to maybe recovering a little bit, or at least having some consolidation and some price stabilization for the Nasdaq. So that's going to be very, very important to watch. So for NIO, 38.50 is going to be the level to watch. I know that we closed below 38.50, but that right there is going to be the support level, because I think after hours we were pushing higher. So if I go over to the 5-minute chart, you guys will notice that we closed at 38.80, right? So that's going to be the level. This was the candle at 7:55 p.m. So we did see some more buying pressure come in, and NIO closed at 38.80. So that's, again, it's going to be a support level to watch starting tomorrow. 38.50 is going to be NIO's support level. I know we came all the way down to $31 per share. That was absolutely incredible. In fact, let me bring out the 200 simple moving average. So that's going to be sitting right here. That's going to be right there. Palantir I'm going to cover next. So again, just hold on one second. So NIO, previous resistance, new support all the way as low as $30. And this right here, 38.50, is going to be a much, much stronger support that we need to watch starting tomorrow. And then the resistance is going to stay put at $43 per share. So 43.28, 43.30 is going to be the level to watch. So I'll go ahead and put that here. So again, everybody new joining in, these are going to be levels that we're watching for next week. I will go ahead and put that for NIO. So support we're watching is going to be at close to 38.50. We closed after hours. NIO was pushing higher, so we closed much higher. And then resistance wise, if NIO can break over $40 and $43, those are going to be two levels to watch. Then we could potentially be headed for some type of a recovery and some type of a trend reversal for NIO stock as well. So again, everybody who's joining in, thank you so much for joining. Make sure that you drop a like. Really helps out with the channel. And these are going to be some levels to watch. I'm going to cover Palantir and some other stocks as well, so make sure that you guys stick around for that. But for Qs, that's going to be the NASDAQ ETF. Support to watch 297. The resistance to watch 309 next week. Square support $200 and $215. There's going to be two levels. The resistance to watch 245. Apple support to watch 117 and 120. Now on Friday, I put out a very similar list on our Discord. I put out a lot of different stocks and I put out a lot of different support levels. If you guys want to get access to our Discord and our TradingView charts, the Patreon link is going to be down in the description below if you guys want to join. Again, I really do appreciate you guys' support. We have a little bit over 220 members, but for Apple, the resistance it needs to break out of is going to be 124, and then for NIO that we just broke down, support 38.50 and resistance $40 all the way as high as 43.28. Again, that has previously acted as a support here, and then we can see some signs of a recovery. So next up, we're going to go over Palantir. Palantir is on a different trajectory. Palantir has been doing incredibly well, in my opinion, from a price action standpoint. I did a recent video on Palantir as well, where they completed a partnership with AWS ERP. So actually, let me go ahead and see if I have that available. So all right, so we don't have that yet, but 2250 is going to be a really, really strong support level for Palantir, right? That's going to be the most important level. We have gotten consistently validated at that level. So this right here, a strong support for Palantir. And this was coming in from December 3rd. This right here, another really strong support. And right now we are just consolidating at 2250. So that's going to be the support level to watch for Palantir at close to 2250. And you'll notice how if the broader markets keep selling off, Palantir is not selling off as aggressively anymore because a lot of the selling pressure has somewhat been exhausted. Like Palantir, for example, has been down, close to over 55%. Like that's a pretty significant correction for the stock. The RSI came all the way down to 40. The MACD has been aggressively selling off. So what we need to see from Palantir moving forward is some type of a consolidation sideways, right? That's what we want. We want to see some consolidation sideways for Palantir at close to 2250 levels, and a breakout over $25 is going to be the most important thing. So let's take a look at the resistance. This is going to be sitting at close to $25 because $25, if you've been keeping up with the channel, $25 has been the level where Palantir has been struggling for days. This is days, like 1, 2, 3, 4, 5, 6. It's like 6 days in a row when it just, even if it was retesting highs of $25.85, it would always close below $25. That was pretty interesting. Like it was always closed below $25. So there was a lot of supply and a lot of resistance kind of weighing down on the price for Palantir. So a quick update on the futures market. The S&P is now down close to 23 basis points, and we've got the NASDAQ futures down about 91 basis points, trading as low as 12,500 and 50 as of the time of this video. So we are getting rejected at those levels. So we're indicating a potential red start to the week, but we'll see. We'll see how everything turns out. All right, so what other stocks are we watching here? Let me take a look at the list. So we covered Palantir, NIO, Apple. We covered, all right, so Riot. Philip, we're gonna cover Riot for you. So Riot is potentially retesting the 50 EMA. Let's take a look at the cryptos market. And the cryptos, the Bitcoin is now in red. I think it was green earlier, but then it turned red. So we are pulling back. And, of course, a lot of it depends on where blockchain and Bitcoin, of course, goes for Riot. And SOS, I haven't really looked at that company. But for Riot, I mean, it's been making lower highs, lower highs, lower highs. This right here was a horizontal support. We actually broke it down. So the next level to watch potentially is going to be sitting roughly at $32, kind of aligned with this previous support. So that was sitting right here, coming in from February 10th, and this is also kind of aligned with that 200 simple moving average on the 4-hour chart for Riot. So that would be the level to watch. $32 going into next week. Now we really need to see if $40 gets validated. So that is going to be this level right here, because he validated that support here, and this has also been a previous resistance for Riot. But it heavily depends on where blockchain goes, right? Where cryptos goes. That's going to be the most important thing for Riot. Is if cryptos push up higher, then of course Riot has been following with that pattern. So keep a close eye at 2 support levels, I would say, for Riot. At close to, let's see, so that's going to be sitting at close to 32. So $32 is going to be the first support, all the way as high as $40.50. Again, this one actually depends where we open. So $40.50 depends on where Riot opens. If you open above $40.50, then wait for a validation of that support, and then depending on where blockchain goes, then we can see some more upward momentum for Riot. But if we break down and if we crap down below $40.50, and that would be the resistance that it needs to break out of, then that would basically become some type of a resistance that Riot would need to break out over. But for now, we're going to keep that as a support because we're like literally exactly at that level. So 40.50 is going to be the level as a support or a resistance, depending on where it opens. And then a resistance that needs to break out of is going to be $57. Of course, there's going to be some moving averages along the way, but $57 is going to be a more critical level it needs to break out of, because that has been like a double top resistance for Riot. Here, we're just consistently getting rejected at that $57 level. So we've gotten rejected like twice, 3 times, a lot of times for Riot as well. All right, so again, for everybody new joining, let's see. So we've got 1,400, 1,500 people watching. Again, make sure that you guys drop a like. Everybody new joining, my name's Caddy. This is a channel that I started back in April. We do a lot of fundamental and technical analysis on a lot of stocks. We talk about the broader markets as well. Go over the economics, go over the labor market, taxes, inflation, interest rates, and then of course do a technical analysis on individual companies as well. Thank you so much for joining. I really, really appreciate each and every one of you guys. These right here are stocks that we have covered so far. So QQQ, that's going to be the NASDAQ ETF, Square, Apple, NIO, Palantir, and Riot. Yes, so USO, let's take a look at USO. Thank you so much for the donation. I really appreciate that. It could be, it could be in the near term. 6 months to about a year. I mean, that would be a pretty long time for oil. Yes, we saw the Saudi Arabian news. There were some oil attacks that basically led to the barrel, the price of oil, sitting over $70 per barrel. So let's take a look at where it's trading. So WTI crude is now at $67.47, up just about 1.8%. So we were hitting highs of $68 per share. So USO, energy in general in the short term could be a good hedge against tech, because this right here, again, going back to our analysis on this chart, this is sector indices for different sectors. Tech is up top here in green, XLK. It's been ripping through the roof, a 98% increase since like May and like February of 2019, and energy was all the way down here, right? That's the line in blue that you guys see kind of trailing behind. It's going to be this line right here, and this is going to be tech. So you'll see such a significant divergence between those two sectors, right? It's just like sky, day and night. So, and moving forward, you guys will notice in 2021, like the last few months, you'll notice that energy has absolutely taken off. It's up over 33% here. And financials is going to be the second sector, and then all other sectors kind of lagging behind those two leaders, right? So that's going to be really, really interesting. And energy in the short term I wouldn't say it would be the worst trade. I mean, there's going to be a lot of opportunities here. Why are so many people spreading fear today? Did you see Morgan Stanley say that they expect NASDAQ to test 200 EMA? All right, so where is the 200 EMA? So, Carlos. But to answer your question, Glyco Energy would not be the worst play right now. I would consider some opportunities there. USO would be one of the funds, but again, the time frame is going to be much shorter, because I don't expect this rotation away from tech and growth to persist for a long time. I maybe see this for maybe another quarter, maybe a few more months, but then again, tech is going to be the one, in my opinion, at least in my strong opinion, to be the leading sector once again. As the dust settles, as oil prices stabilize, as interest rates, like the yields, kind of stabilize, and then at some point the valuations are going to matter once again, right? They mattered a few weeks ago when they were overvalued, but at some point the valuations will potentially even become undervalued. So they will become, they will come into question once again, in my opinion, and I'm going to continue to kind of average into those positions that I see are going to be really, really strong for tech. per se. So Carlos, thank you so much again for the donation. I know there's a lot of fear and uncertainty in the markets. Let's take a look at the NASDAQ. And did they tell you, like Morgan Stanley, was there like a price target, or just 200 EMA is what they're focusing on? Was there like a price target that they mentioned for the NASDAQ? Let me know if there was any type of a price target that they mentioned. But let's take a look at the 200 EMA, exactly where that's going to sit. So 200 EMA, that's going to sit. Yeah, so the 200 EMA is going to be exactly where we retested. Oh, actually, that's going to be the 4 hour. So let's look at the daily chart. Yeah, so 200 EMA is going to be somewhat aligned with my price target of close to 11,800. So we'll see, you know, where if we do come down to that level again. That's like going back to our price target of so all right, this right here was Palantir. When we were talking about Palantir, I wanted to quickly bring this up, and this actually came out very recently as well. So you'll notice how Palantir completes a partnership with ERP Suite. That's going to be AWS, so Amazon Web Services. ERP Suite, this came out on March 6th, so on Saturday over the weekend. So very, very interesting stuff there. We also covered Palantir. You know, Kathy would purchase some. This right here is going to be like the valuation. Of course, there's a lot of debate about valuation being a little bit overstretched and overheated for Palantir, but these are some of the estimates that I had, right? So Palantir, shares outstanding 1.47 billion, revenues 1.1, 2020 revenues was 1.1, and they're expecting 4 billion in revenue in 2025. So we'll see if that happens, and they're expecting a 30% increase in top line revenues in this year. So that's going to be in 2021. So 4 billion in 2025. I'm estimating 1.4 billion in 2021. And this right here are going to be different price targets and different sort of, you know, whether it goes up or down and how that's going to affect their price to sales, PE, forward PE, and enterprise value over sales. So right now, where it stands, Palantir is trading at 150 times forward PE and 32 times sales. I know it's much higher than you know, the S&P averages, and even, you know, on a, if you were to debate that, it's overvalued, right? I have no argument saying that, but the future growth is very, very substantial for Palantir in my opinion, and that's what's going to justify the price in the future, because I personally expect them to overshoot the 4 billion in 2020 revenue. I expect them to do $6-7 billion, considering all the partnerships and the clients that they're winning. I mean, if you were to look at AWS, Amazon Web Services, and they have a partnership with IBM that was recently announced, and they also had a partnership with 3M that was announced very recently as well. So I fully expect them to kind of beat their own guidance. But let's take a look at this right here. Is going to be the forecast that I had. So going over to, let's see, your question on the NASDAQ, 200 EMA, that's going to be sitting roughly at 11,000. That's the white line you guys see. The white line is the 200 EMA, and the blue line is the 200 SMA. That's going to be the 200 simple moving average. So they're both sitting at roughly 11,600, 11,700. So in my opinion, yes, that is a possibility, depending on where tech goes. And nothing, in my opinion, is going to outweigh tech. So the NASDAQ is now down close to 91 basis points, so we are hovering over 12,500. And 12,000, sort of like that, 11,800 is going to be the level to watch. So let's go over to this. So again, that's going to be sort of like my correction territory. These are going to be the two price targets. They don't have to happen. I could be wrong about these, but that's about as low as I could see both the NASDAQ and the S&P going. So the NASDAQ bottoming out at 11,800 and the S&P bottoming out at 3,500, and a correction of 16% and 11% each. So this is the VIX. This is also something we have covered in the past, the volatility on the S&P 500. What is the level? What is the level? Question for you guys for on the live chat. What is the level that that I personally see, or what's the support for the VIX? Let's answer that one. What's the support for the volatility on the S&P 500? That's known as the VIX. We've got a little bit over 1,500 people watching, so I know that a lot of you guys know the answer to this. So what's going to be the support that we've been watching for the VIX? And it's just been struggling to break down below that level. Let's take and then we'll cover Tesla as well. We'll cover Tesla. We'll go over Tesla in just a second. Nikhil, I've covered XPeng earnings. So if you go on my channel and you look at XPeng, if you just type my name, you will find a video that I've covered the earnings on XPeng ahead of the earnings. I did that like a couple of weeks ago because I know there was going to be a lot of questions, people watching. So yes, 20. You guys are absolutely right. 20 is the support. That's the support. And this right here is the resistance. We've tapped out that level so many times. So you'll notice consistently 20 acting as a support here. We've been validating that level, and for the VIX, 40 has been the level here. Now, do you guys think that the valuations, interest rates, yields, macroeconomics, labor market taxes, do you think all that combined has the ability for the VIX to spike as high as 80 levels from back in March 2020, like when we had the global pandemic? The VIX was kind of hovering over here, hovering over here, hovering over here, and then boom, spiked all the way to 85, 90 levels. Do you think right now the VIX is in a situation where we curl up and we push up all the way to highs of, let's say, 85, 90 levels, kind of like the same level that we had the pandemic? So let me know what you guys think. Or do you see it more of a scenario where, you know, the VIX kind of pushes up and gets tapped at 40 and then sells off? You know, which one of those two scenarios do you guys see? This is going to be scenario number 1, and this is going to be scenario number 2. That's the volatility on the S&P 500. What do you guys think, scenario 1 or 2? No way it's going to 80, gets tapped at 40, scenario number 2. Yeah, so that's what I think so too, because every time you look at the last few times when it's hit 40 levels, so here, actually let me draw that. So last two times here, and over here has all been because of some type of overheating the markets, you know, the labor market, some catalyst. Nothing really blindsided the markets like it did back when we had the pandemic over here. That was pretty surprising to the economy, lockdowns, you know. So that's one of the reasons why I'm estimating that we're not going to see a crash per se. We're going to potentially see a correction, which is normal, right? This is uncertain times, and I also mentioned that, you know, everybody needs to get comfortable with being uncomfortable in the markets. That's something that over a long time, if you're going to be investing for 10 years, 20 years, 30 years, you're going to go through so many days that are going to look like this, that are going to look exactly like this, right? And again, Tesla, Amazon being so bigger squares of the S&P 500, they contribute a lot to the sell-off, right? And then all these other sectors like consumer defensive, we've got, you know, energy was slightly up a little bit. So, but we are going to see days like these. And this is the price to sales ratios for a lot of these companies. Amazon trading at less than 4 price to sales is heavily undervalued, if you ask me. I mean, trading under $3,000 is just crazy for Amazon. For a company like Amazon, it's crazy. And this is the historical price to sales for the S&P 500, trading at 2.86. It's the highest level that we've seen in a long time, so 2.86. And it's been kind of curling up. This was under 1. This right here was around 1 or 2. And right now we are sitting all the way as high as 2.86. So yes, I mean, there's no doubt arguing that the valuations are out of hand. We are trading at a much higher price to sales. And this right here is going to be the PE ratio for the S&P and the NASDAQ as of February 26th. So you'll notice that we are sitting at close to 43.74 and 38.46 PE ratio. That's going to be the price to earnings. And then if you were to kind of look at where these companies are trading, we're trading at a much higher PE, right? I mean, Tesla just dropped down a little bit after the recent sell-off. It's trading at 999, so less than 1,000. Finally, Amazon has had 71, Apple 32, Microsoft 33. So kind of aligned with the S&P 500, but again, its prices have gone up, earnings have gone down. So that's one of the reasons why the PE has kind of averaged much higher, and it's gone up almost twice in the last year. So that's just kind of like the quick presentation. Another really interesting stuff. So this right here, I think we covered it. I don't know if we covered it during a live stream, but what did you guys think about this? There was so much SPACs in 2020. So 248 SPAC IPOs in 2020, 186 SPAC IPOs in 2021. And we're already 2 months into 2021, and we already have seen 186 SPAC IPOs. What do you guys think about that? averaging $296 million per IPO, and combined they have raised over $100 billion in 2 years. Not even 2 years. I mean, this is coming from a year and a half. What do you guys think about this stat? I mean, this is like a SPAC IPO mania. Like combined, we're talking about 434 SPAC IPOs. Wow. So that's pretty crazy stuff as well. And there's like not a lot of capital chasing too many opportunities. So we're kind of getting spread across a lot of opportunities in the market. And this again, of course, global chip shortage affecting the automotive industry, electronics, so on and so forth. So the Nasdaq down about 90 basis points, Nasdaq futures, S&P down about 23 basis points. Let's go over to Tesla really quickly. But again, thank you so much for joining in, guys. Let's take a look at how many people we have. So 1549. Make sure that you guys drop a like. And then this right here is going to be the quick update on everything that we're watching. So QQQ support 297, resistance 309, Square support 200, 215, 2 levels to watch, resistance at 245. Anything under 200, in my strong opinion, personally, is going to be a strong buy for Square. Apple support 117, 120, 2 levels to watch, resistance 124 that it needs to break out of. NIO 30 at 50 is going to be the level to watch. The support is going to be sitting right there. And after hours we were trading as high as 38.80 levels, so it did push up. So that's going to be the support level to watch starting tomorrow. Although with the Nasdaq being red, it's not looking so good that we're going to potentially open above these levels. But resistance 40 all the way as high as 43.28. Support for Palantir 22.50 is going to be very, very critical. Resistance at $25. Riot support at $32 and $40.50. Resistance at $57 per share. Talking about Tesla, Tesla also sold off, very, very aggressively. So it was trading as low as $539 per share. This right here is sort of like the area of demand that I'd mentioned in my previous videos. So I had mentioned anything under $614, $615, so like right there, is going to be the level of a demand or an area of support. Now, of course, the pattern has shifted, and it's shifted quite consistently. Like we're trading below the moving averages. There's a lot of weakness. There's a lot of lower highs and lower lows being put in from Tesla's stock price. So keep a close eye at this support. Anything inside this green rectangle is an area of demand, in my opinion. So anything under 600 is going to be a strong support. Now, again, depending on where we open tomorrow, we're potentially going to open or gap down lower once again. But we'll see where that opens. So 470 is about as low as I could see Tesla going, and it's the same with NIO. Very quickly going over that because that's where the 200 simple moving average is. That's where the previous resistance is. So previous resistance, 200 SMA sitting at $30. So let me actually go ahead and put that as a support. That's kind of like the worst case support is going to be $30 for NIO. And then for Tesla, it's going to be sitting at close to $475. Kind of like the worst case target support if you do see any more persistent selling, because at that point we're talking about one of the biggest companies in the S&P 500 down over 48% from its all-time highs. So that's a pretty significant sell-off for a company that was less than 4 months ago added to the S&P 500, and it's down over 40%, 48%, almost 50%, and had a market cap over $800 billion. So that's a pretty incredible story right there. So what do you guys think? What are your price targets on Tesla? Tell me the support and tell me the resistance for Tesla. What is the lowest you guys see Tesla going? What's the support you guys see Tesla going in the future? The lowest support, and then what is the resistance in the near term that you guys see? So type in support, number, price target, and then resistance. Type in the number and the price target. So let's take a look. 360, got 470, 550, 180. There's always one person. 360, 470, 350, 420, 420. 420 would be really hilarious though. If it came down to exactly 420 and then bounced off of those levels. So support 400, resistance 600, support 470, resistance 613. Support 460, resistance 630, 550, 550, support 550, resistance 650. That's a really good one, William. I like that. Support 550 and resistance 650. 330 low, $1. Support mid 400s. So 470, 450. Yep. So I like that too. Right. So, we'll see. The Nasdaq determines. The Nasdaq has all the cards right now it has the fate of a lot of these stocks, individual stocks, because we know that when the Nasdaq sells off, these individual stocks sell off much severely, right? It's all on the Nasdaq, and now it's not looking good even more. I mean, we're down over 1%, trading as low as 12,531, and the S&P is down over 33 basis points. So looks like we are going to potentially see some more pain next week for tech, and if that happens, so for Tesla, we're going to talk about valuations, because I want your guys' opinion on this. And this is something that we're going to do together. I mean, it's not like, let's bring out the valuations, let's talk about it, let's have a debate, and be respectful with each other with the analysis. And, we can agree or disagree with valuations, but let's talk about what's causing Tesla to go down. All right, so this is going to be Tesla. So Tesla, do you guys think this is actually going to come to fruition? I have deliveries in 2020 at just under 500,000. That's what they delivered, 499,550. In 2025, do you think Tesla is going to deliver over 2.2 million vehicles in 2025? Is it going to be more? Is it going to be less? What do you guys think? 2.2 million is not a unrealistic number for us to think about when you think about Giga Shanghai, Giga Fremont, Texas. We've got one in Berlin. So when they scale production at such a rapid pace, and then of course the electrification, EVs moving more towards EVs in the future, with throughout governments, California putting a ban on sale of new combustion engine vehicles. 2.2 million I feel like is a very reasonable target, unless you guys have more than 2.2 million, less than 2.2 million, 3 million by 2025. More than 2.2 million, less than 2 millions, 5 million by 2025. So that's going to be kind of like what I have. And then if you were to look at the revenue, I have estimated 126 billion with a net income of close to $22 billion. That's going to be a reasonable margin. We're talking less than 20%, but we're talking like 17 or 18%, so 17.5% margin. So actually, let me go ahead and take a look. So we're talking 17.5%. Net income margin, which is reasonable for an automaker and a software company. We're estimating, they're going to have their AI, full self-driving, and services, insurance business, solar business. So all those margins are very, very difficult to understand. Some cases, of course, the margins are going to be much higher, and automotive, I'm expecting it to be much lower. So the average is around 17.5%. Again, this is very, very estimated, or like my inputs for the future for Tesla. We're talking about $23.17 in EPS. This is considering that this number doesn't change. So that's going to be shares outstanding, right? Shares outstanding is 959 million, so just under a billion shares. This is assuming that Tesla doesn't issue more shares to raise more capital like they did back in September, or they don't dilute any shares, or in other words, they don't like purchase back any shares or don't have any shares buyback programs. So $23.17. Now this is the slide, or this is the level that I need your guys' opinion. So of course, let's take a look. Tesla at 597. So if we update that 597, we are now trading at 573 billion almost market cap. So 573 billion. So you guys will notice exactly 573.9 billion. So that's going to be the level that I have, 573 billion. It's trading at 18 times price to sales. Do you guys not think that's reasonable for a company, or is it still overvalued? I mean, for a growth company, for a company that could potentially grow by a lot. And then forward PE at 145, and of course trailing 12-month PE is at 933. So that's obviously really, really high. And even these levels, anything over here, actually anything. I mean, this is all overvalued for Tesla. Like a 12-month trailing is substantially much higher. Like this is, we're not even going to dive into this. We're going to mostly talk about forward PE because that's the next 12 months. And again, the stock market is also looking forward. We're talking about the next 6, 12, 18 months. So the forward PE is a more reasonable metric that I personally look at, which is right now, as of today, sitting at 145. If it comes down to 500 or 525 or like 350, that's some of the support levels that you guys mentioned. We're talking 85 times forward PE, and we're talking 11 times sales. I mean, if you were to look at this, Apple is trading at 7 times sales. So Tesla trading at 18. If you were to look at Square's trading at 11 times sales, right? You look at Palantir is trading at 41 times sales right now. And AMD and Nvidia. Nvidia is trading at 20 times sales. So Tesla trading 18 right now. Then are you guys saying that Nvidia is also overvalued? If you think that Tesla is overvalued right now at 18 times sales? And then the PE, we're talking forward PE at 145, and Palantir is trading at 114, and Square is trading at 123. I mean, these are the only two companies that come close to Tesla's valuation in terms of those ratios, right? So, I mean, I have a price target of close to over $1,000 on Tesla. I easily see the market cap hitting over 1 trillion. You know, revenues of over 120 billion in 2025, net income over 22 billion. That, even if you take a very reasonable 45 times multiple, that's a 45 times 2025 PE, we're looking at a market cap of over 1 trillion. This is simply based off of EV sales. If you were to kind of tag along the autonomous driving, which we really need to understand if it comes to fruition or not, then we're easily looking at a much higher market cap. But based on valuations, I think forward PE for Tesla is reasonable. I mean, if you do any more selling take place, like if it comes down to 500 again, like 525, at one point on Friday, we were trading 16 times sales and 127 times forward PE. So, you know, those are the debates that we need to have with everyone, is like, you know, what's the right ratios for this company. But again, like company like Tesla, it's very difficult for us to really understand, you know, what the valuation is, because traditional analysts have failed to put an appropriate price target. ARK Invest is going to put out a recent study recent report on their new price target on Tesla. And if I were to, so let's actually swing back to that report, right? So this is what she mentioned, everything about autonomous and everything else. So she basically goes on by saying that EV skepticism has, especially for analysts, for the institutions that are mostly value analysts, has been really, really wrong for Tesla. Like, if you were to look at the price targets on Tesla, somebody has like a price target of $67 or $70 on Tesla, and we've also broken that down in one of my previous videos. But she basically says that based on Wright's law, that's one of the laws that she uses, these scenarios will win out eventually, and they're on the right side of change. That's a very, very important thing for like a numbers for us to look at. And this right here is going to be EVs. You'll notice that expected global unit sales of EVs over the next 5 years to compound 82%, including China, for all unit sales. So that's you know, that many people that don't believe those stats because the automotive industry has already peaked and matured. But Kathy believes that we are moving towards autonomous and robo-taxis. Do you guys think 82% is a reasonable number, or do you think it's like it's a pretty high estimate of how much growth we're going to see for electric vehicles over the next 5 years, let's say 10 years, in terms of global unit sales? Do you guys think that is a reasonable estimate? This was, again, all the notes from her 40-minute briefing that she had over the weekend. She put out a video going over fiscal policy, monetary policy, everything else. In my opinion, I think that's very reasonable. 82%, you know, compounded over the next 5 years is reasonable for us to expect, as most of the world is moving towards electrification, EVs. And one of the markets that I feel like is very, very underappreciated is India. Like, a lot of analysts are not even pricing in India, and Tesla just opened a new factory down south. In fact, I'm actually thinking about taking a trip down there to basically check out that factory and what the operations look like for Tesla. Because, you know, the more we can research, the more we can understand. And I know that a lot of you guys don't have accessibility to those factories, especially in India. You know, I can go over there and shoot a video and kind of really understand what the value looks like for their factory over there. But 82% is very reasonable in my opinion. And there's some other things that she mentioned as well. So here's what she says. She says that you know, after the telecom and tech bubble burst, 1999-2000, and after the 2007-2008 housing crash, many institutions became risk averse, and that's what we talked about as well, and hired analysts that are more value analysts, quote unquote value analysts, that have been analyzing the auto industry only and are very benchmark driven. And that was something that was very interesting as well, right? When everyone every time we talk about performance, when we talk about returns, when we talk about how well you did that year or that month, everyone benchmarks against the S&P 500. Everyone understands, well, the S&P was up over 5% and I was up over 10%, so I outperformed the S&P 500. But she believes that we're going through a revolution in the auto industry with electric vehicles, and ARK Invest is very forward-looking, focused on technology for the future instead of traditional backwards-looking world. And that's what she mentioned as well during the report. And she talks about time horizon and how that's a potential luxury to ARK Invest. They are more focused over the next 5 years instead of like the next month or the next year. And that's basically what they don't worry about, the short-term volatility and the fluctuations, because they expect exponential growth in the future for the markets as well. So that's going to be that. And then additionally, Kathy Wood says that innovation and tech are being so broad in these institutions which have analysts that are focused on specific sectors. So again, that was another thing that was really, really interesting for me to learn was she basically thinks that a lot of analysts that are hired on these traditional institutions are very niche, right? They're focused on subsectors, specific sort of industries, whereas at ARK Invest, they have more generalists that are focused on a lot of different things and the broader trends, because the auto industry is a collaboration of three of the biggest revolutionary industries. We've got robotics, we've got electric vehicles, so energy and battery packs, and we've got artificial intelligence and AI. So it's a collaboration of all three things, and the more people collaborating and working on those broader trends, the better it's going to be in the future, and for us to understand the valuation, the industry growth, and all those different things. So yields will hit 2% this week. You heard from me first. Phil, thank you so much. And we've been covering this. We've been talking about this in the past as well. This right here is my estimate, and I recently put out a video as well that this are going to be all of the estimates that I could see. Like VIX getting topped out at 40, yields getting topped out at 2%. Again, this is not guaranteed. This is something that we could expect in the future if that happens. The NASDAQ getting bottomed out at 11,800 and the S&P bottoming out at 3,500. So for everyone new joining, I put out a video going over sort of like my prediction. Now again, I could be wrong. We could go much lower, or we could not even retest those levels. So, but that's kind of like my estimate, putting the S&P down about 11% and the NASDAQ over 16%. Again, not a crash. A crash would be over 20%. So that, in my opinion, is very, very unlikely. 16% is quite reasonable, and a correction for the S&P, since energy and financials are also going to weigh in on the S&P, is going to be really, really interesting as well. Carlos, Apple switching to Indian manufacturing too, long India. Yeah, I mean, we've got a lot of growth that we need to accomplish, and it's still a developing country, so we'll see, how well we do. Lisa Sue, yes. So let's talk about AMD. So for Tesla, we talked about the valuation. We talked about some of the support levels of support. There's going to be two levels to watch. The first one is going to be sitting roughly, I want to say, at $600. Depending on where we open. If you gap down, then that will become a resistance. If you gap up, that's going to become a support, but all the way as low as $470 per share. And there's going to be one more support that I want you guys to watch. It's going to be $650. So those are going to be three levels to watch from a support standpoint, and resistance, we're going to be watching $615. So $615 is going to be a more near term, and all the way as high as $650. So those are going to be levels to watch. Again, for everybody new joining in, let's take a look at how many people we have. So 1,400. Again, guys, make sure that you drop a like. Let's see if we can get to at least 1,000 likes. We're just about 300 likes away from that target. Thank you so much for joining in. And for Qs, watch 297. And the resistance is going to be 309. That's going to be support and resistance. Square, $200, $215, two support levels, resistance at 245. Apple, 117, 120, two support levels, and resistance at 124. The NIO, support at $38.50 and $30, and resistance at $40, $43.28. Those are going to be two levels to watch. Palantir, support at $22.50, resistance at $25. Riot, we've got $32 and $40.50, and resistance at $57. And then Tesla, $600, $650, and $470, three support levels, and resistance at $615 and $650 per share. Appreciate your insight. Do you see GM? Thank you again so much for the donation, by the way. I really appreciate that. Do you see GM and Ford as attractive for the low price sales compared to the rest of, especially their intent to switch to EV? let's take a look at this chart again, and I think I do have Ford and GM here. So you're right, Ford and GM over here, very, very low PE ratios and price to sales. So these are the two companies that we're talking about relative to Tesla. And talk about this difference, right? So we're talking Tesla price to sales at 18 and Ford basically 0, and it's running exactly where the sales are for 2020, and GM is at 1. And PE ratio 933. Ford not profitable for the last year, so it's not available. And then GM 12 times PE, and then forward PE is at 145 for Tesla, 8 times for Ford and GM. I think the biggest thing that the market is pricing in, Salman, the biggest thing that the market is pricing in right now for Tesla is the autonomous driving, the battery technology, the solar business, so the energy business. That's why it's giving a much premium valuation to Tesla. But if your goal is to basically invest in EVs or electric vehicles, I would consider maybe Tesla over Ford and GM. And the reason, again, this is not financial investment advice. Please make sure that you do your research and analysis. But that's just my opinion, because from all the research that I've done and from everything that I've learned about the company, battery technology wise, and collecting miles, which is going to be very, very important for AI, artificial intelligence. Tesla has over 30 billion miles worth of data collected, and the more of an install base that the company can gather. Now, of course, Ford and GM they have a pretty significant install base, right? When you talk about how many people are driving Ford, GMs, but when we talk about software and AI, I feel like Tesla has them beat by a mile or so, right? So that's the only thing. And yes, right now the valuation can seem very skewed when you think about both of them. When you think about all three of them as automakers and like electric vehicle manufacturers, then yes, Tesla incredibly overvalued. But then when you price in autonomous driving and which company is going to benefit and eventually have the highest potential to win out in the future, I am more than happy to bet on Tesla personally than any other electric vehicle companies out there. But that's, again, just my opinion. I would love to hear what you guys think as well. But if you were to compare it apple to apples, if you look at Tesla, Ford, GM, just an automaker, then yes, Tesla is incredibly overvalued. But when you compare that with software, AI, I still think that it's either fairly valued or has a lot of growth potential in the future, hence undervalued in my opinion. So we'll see. Yeah, so they're running circles around Ford and Toyota's EVs. Their lead is huge. So yeah, I mean, we'll see how, of course, I agree with that, and we'll see what the future looks like for these companies as well. So let's take a look at the futures. The Nasdaq down over 1.1% now. The S&P 500 futures down about 31 basis points. Let's see if we can find anything else. So this right here also came out today. So Powell's dashboard shows how far the U.S. economy has to go on jobs. Interesting stuff here. Because we know that Jerome Powell was speaking with the Wall Street Journal webinar that was on last week, I believe on Thursday or on Wednesday. And I also talked about how I personally don't want him to come out and say something and then artificially prop up the markets for us to push higher once again. I'd rather be more comfortable for the markets to pull back, correct itself, stabilize, and then organically move up back. That's what we want. We want, we want organic growth. Right? What if Jerome Powell says something today and the markets drop again tomorrow? Are we going to continue to expect him to come online and say something to help the markets? Right? Absolutely not. Eventually, we need to kind of transition away from that, and we need more organic growth for the markets, for the buyers and sellers to really determine, where the markets are potentially headed. So I know that he didn't provide us with a lot of color on the bond market and the interest rates, and a lot of people were expecting him to expect some type of tightening, expect some type of offering some color on the liquidity ratios for a lot of central banks. Are they gonna buy bonds in the future? Because when there's a lot of demand for bonds, the prices will shoot up, hence dropping the yields. That's kind of like the idea that a lot of people were focused on. But I'm happy personally that he did not do any of that, because that again is not organic growth. We need more organic growth from the buyers and sellers in the markets, and that's what's going to help. That increases the breadth of the market. That helps the strength of the market, because all these moves that we've been seeing in the past, like all these recoveries, they're coming off a weaker strength. That's why we're seeing a much significant pullback every time we drop, right? So it's coming off a weaker strength and weaker breadth. It's not real, so to speak. It's like a bull trap per se. So I'm more than happy to have the markets pull back, correct, stabilize, and then organically push up. So this right here is going to be the their full sort of report and what Jerome Powell sees as full employment. This is going to be Janet Yellen's labor market metrics, so her dashboard. Since the pandemic, or actually since the global recession back in 08-09, these are some stats that are back to normal or even much higher than that. Or in the yellow, you guys will notice it's more than halfway, and then red is going to be less than halfway. So we're talking about jobs opening rate back in 07, so 2004, 2007, the average was roughly, I think it was 12%. We dropped down to I think it was 2%, we dropped down to 1.6. And then at its worst, and now we have fully recovered to 3.8%. So job openings are a share of sum of jobs, openings, and paid employment. So we are much higher than the Great Recession that happened in 07-08. This right here is layoffs, so we are much higher at 1.1% as well since the recession. Unemployment rate 4.1%, although it's now at 6.7, I believe, after the recent jobs report that came out in February. Non-farm payrolls sitting at 192,000, much higher as well. So quits rate is another one that's much higher than the global recession. And this is long-term unemployment shared, hires rate. So workers hired as a percentage of paid employees is still lower than back in June. It's much higher than June 2009, but it's still lower than the Great Recession back in 07-08. And then average hourly earnings is also lower. Total compensation paid to workers divided by hours year over year, sitting at 2.9%, and back in 2012 is at 1.6%. This right here was back in before 07-08. And labor force participation rate. So this is one of the reasons why Jerome Powell has like a different definition of full employment. So labor force as a percentage of the working age civilian non-constitutional population. So this is what he wants to improve, at least in my opinion. This is what he's looking forward to, because if you were to look at this, you'll notice that he has a different full employment definition. So colleagues have learned that a lot over the last decade about the meaning of full employment. Now they're looking at a new set of labor market indicators as they chart a recovery from the steepest economic downturn on record. Michael, thank you so much for the donation. I'm going to quickly go over Nvidia right after I break down this report. But if you were to look at the recently highlighted several data points that underscore the central bank's shift in focus beyond the headline numbers and towards the most vulnerable sections of the workforce, it's an important development for Federal Reserve watchers to grasp, engaging how long policymakers will keep interest rates near zero as they judge incoming data. So that's the main question, is Jerome Powell, his full employment definition, that's the only time. So two things that we need to understand for Jerome Powell is unemployment and inflation. When those two goals are met, that's when we're going to see quantitative tightening. Right now we're in quantitative easing. After those two goals are met and their conditions are met, then we're going to see more tightening, hence interest rates going up. We'll see how the equities market reacts. They are nervous to economic tightening and interest rates going up, although I feel like somewhat is getting priced in as well. But we'll see how that goes over the next 2 to 3 years. Again, this is not something that we're planning to do next quarter or next few quarters or next year. This is way out into the future because it takes time for full employment to come back, because we're talking about different demographics, we're talking about different low-wage earners and how that's changed since the global recession, right? So 2000, 2004, you'll notice that US, so we were kind of trending down, and this right here is because of the pandemic. We are coming down once again. So US overall wage growth has also been kind of flat since 2015, 2019. So we'll see what the full employment definition looks like from Jerome Powell. And of course, he also wants no college degree participation, also much, much higher, because that has been trending down for some time. So US labor force participation rate, high school graduates, no colleges, it's just been trending down. And this right here, steep decline after the pandemic, right? It's just down and then pushed up and then down again. So that's also one of the things that they're looking to push higher. The future is no labor, robots, artificial intelligence working for us. Humans will need to work. Yeah, I mean, there's a lot of people that actually believe that, and we'll see what sectors or what industries it disrupts the most in terms of robotics and AI. And then we'll see which other industries actually do well, do worse in terms of the labor market. So again, it's going to be very, very interesting for those things as well. So let's talk about Nvidia and AMD. So Nvidia, in my opinion, validated somewhat 475, and this has been an absolutely aggressive move to the downside. I mean, it was trading as low as 460, right? 467. So that was definitely a very, very significant drawdown for Nvidia. Nvidia also has a much higher beta. So if you were to look at, let's take a look. So let's take a look at Nvidia. So Nvidia has a beta of close to over, so 1.41, right? So that's the beta for Nvidia. So it's 41% more volatile than the S&P 500. So that's exactly why we're seeing such a significant drawdown in such a short period of time. I mean, it dropped close to 25% in a very short period of time. So 475 is going to be the support level to watch. 500 is going to be the next sort of resistance because we did close below that level. So in my opinion, Nvidia, again, with a chip shortage, their demand is exceeding their supply substantially, and once all that is settled, of course it takes a lot of time because it's not easy to build manufacturing plants. It's not easy to scale that production and build all these chipsets. And the reason why that happened is back when we had the pandemic. Let me bring that up. So back when we had the pandemic, we had automotive really not basically demanding any chips. So this right here was the chip shortage, and you'll notice that a massive shift in demand from 2020 to 2021. Back in 2020, we didn't really have automotive or autonomous demand, and especially we had a lot of electronics, right? So computers, smartphones, iPads, MacBooks. From work from home trends, there was a significant demand for chips for electronics. And now what we're seeing is a shift away from electronics as well as autonomous, like automotive and auto manufacturers. We've got a huge demand in the gaming sector for consoles, for chipsets. So everything is just getting demanded at the same time. Earlier you only had like a few sectors, and now we have so many sectors coming in, and that's what's causing AMD, Nvidia, TSMC, Intel, all these companies with a global chip shortage. But the challenges are, of course, that it's time consuming, right? It's not something that we can fix like in a week. It's very capital intensive, and it's a short-term glut. So the projections are that we're going to see potentially stabilization by the second half of 2021. That's kind of like the guideline from Lisa Su, she also mentioned, and a lot of other analysts who understand how much of a shortage we have and the demand supply imbalances. But in my opinion, for Nvidia, by the way, guys, if you're new to the channel, make sure that you drop that subscribe button. It really helps out with the channel, and we talk a lot about fundamental technical analysis as well. The broader markets, we cover a vast majority of different news. We cover oil sometimes, we cover crypto sometimes. We'll cover a lot of different things during these live streams as well. So Nvidia, keep a close eye at support 475. That's going to be the level. And then in terms of a resistance, let's keep an eye off $500 first, all the way as high as $515. If it breaks out over 515, then I could see some more upside potential for this stock, because the R side, the MACD, again, incredibly oversold, trading as low as 36. The MACD has been aggressively selling off as well. And again, a huge inverted hammer candle with a lot of buying pressure coming in, so a long wick, and the volume also jumping 13 million relative to the average 10-day, which was under 10 million. So a lot of potential for this company as well. In my opinion, when we talk about price to sales, price to earnings ratios, you'll notice that it's still a little bit overvalued, right? So Nvidia is over here, market cap 339 billion. So is that what it is right now? So 309 billion. So it's even less than what we're seeing. So if I change that, actually that doesn't change. So 20 times price to sales right now. I think they did just over 16 billion, and they reported their earnings, and it was absolutely crazy. It was like fantastic earnings, in my opinion. Great margins, great revenue, and solid net income as well. PE was at 80, so 12-month trailing, and forward PE is 37. So it's reasonable. It's not bad of a valuation. Of course, with interest rates going up, that suppresses future estimates as well. But I think it's pretty reasonable. 20. The price of sales can come down a little bit. That's the only thing. But 475, 450 are going to be two support levels. Very, very strong demand at those levels. Anything under 500, considering the future demand and the future opportunities for this company, is going to be a strong buy, in my opinion, for that stock as well. And then resistance $500, $515. And then this right here has been a range within which it's been trading, right? So the yellow rectangle you guys see right here, it's just been consolidating in between that range. Previous support, so much support at 515, right? So support here, we got validated here, we got validated by that support here, we got validated by that support here as well. So a lot of support at $515. And then 558, 560 was acting as a resistance. So 475 support, $515 next resistance for us to watch. Let's talk about AMD. That's going to be Advanced Micro Devices. Again, very, very similar analysis. $73 is going to be a really strong support here. So that's going to be the level that I'm going to be watching very closely. A lot of support at that level coming in from June, July of 2020. This right here in September 2020, and this right here in October 2020. A lot of consolidation and a demand, you guys will notice, was coming inside this green rectangle, right? So that, in my opinion, will continue to get validated, and a massive long wick. Still trying to stay above the 200 simple moving average and the 200 EMA as well. Actually, I'll go ahead and delete that because I don't personally use that. So again, 71, 73, $74 is going to be the next support level for Advanced Micro Devices. So $74, and then the resistance that we need to watch is going to be $81 first, all the way as high as $88. $88 is such a strong, so you know how Palantir has $25 as one of the strongest resistance levels that it's struggling to break out of? For AMD, $88 is going to be the strongest level because that's where the moving averages are, and that's where we have previously gotten rejected multiple times. If I were to bring this out, this right here is the red rectangle. So boom, right here. That's the level where Advanced Micro Devices has just consistently gone rejected at $88, right? So $81 first, all the way as high as $88, and if you do break out over 88, that's going to really, really help the pattern because then we would be trading outside of this downtrending channel. So actually, let me go ahead and delete this. Let me go ahead and delete this either. And then, yeah, of course, if we break out over that levels, over this, then we can expect AMD to start making some type of higher highs and higher lows in the future as well, and then potentially even push up to new all-time highs. So the price targets I have is well over $110 per share for Advanced Micro Devices. The RSI again is down, trading as low as 34, so incredibly oversold. The MACD has been selling off as well. That's a great question, Carlos, and talking about Montreal, yes, let's go AMD. I have a high conviction on this stock. Fundamentally speaking, they're strong. Their management is excellent. 37% revenue guidance for 2021. I could easily see them surpassing that, over 13 billion in revenues. That's the expectation. But Lisa Su has also exceeded her guidance over the past couple of years. Gross margins increasing 2 percentage points, and if they can do it in a global chip shortage environment, just imagine what they can do when the manufacturing is running seamlessly, when they have all supply chains running, and they have exceeded their demand, because that's where we're going. Gaming, electronics, AI, autonomous. Like, think about the demand for chipsets. There's going to be significant demand in terms of technology for chipsets. So, you know, that's kind of like my bull case, and I've also posted like a report on them as well, like a video on going over their earnings, so you're more than welcome to watch that as well. But that's kind of like the level that I'm watching. And then let's take a look at Apple in terms of the NASDAQ hitting 200 SMA. So if the NASDAQ comes down, it's really hard for us to understand what those individual stock drops are going to be. So you're right, you are asking the right question with Apple. I could see it $113 maybe for Apple if you do see the NASDAQ coming down even more. Because what is going to be the drop for the NASDAQ down to 11,800 or the 200 simple moving average, right? 11,600. Let's call it 200 SMA. That's going to be a drop of close to 18% for the NASDAQ from all-time highs. And from its current levels, we're talking about another 10% drop. Like, that's, again, this is not happening. This is just a question that I'm addressing from Carlos, is that if you do see a retracement down to the 200 SMA and a drop of close to over 10% down to 11,600, how much are these stocks going to drop, such as Apple, Microsoft, Amazon? And that is a bit of a tricky question. We have to really understand the correlation between Apple and the NASDAQ, something that I haven't really done yet. So give me time and I will try to understand the correlation between these different individual tech stocks and the NASDAQ, the broader markets. It's going to keep dipping. Yeah, I mean, that's certain. It's going to keep dropping, but we just don't know to what extent, what degree is going to be the relationship between the NASDAQ and Apple. If the NASDAQ drops 10%, how much of that we're going to see in Apple as well. All right, so let's take a look at if there's anything going on Bloomberg. If they're reporting anything, because Right now, the NASDAQ futures down about 1%, and the S&P 500 futures are down about 31 basis points. So let's take a look at Shift. I don't think I've done any analysis on it. It's down $8. I believe they're competing with Vroom, and there was one more company. I forgot what it was. Or maybe they're not. Maybe they're like a finance conglomerate. But I have done some analysis on it. Watch $7.84 as a support. Jose's, that's going to be the level to watch as a strong support, because that again has gotten validated. And even like the most recent trading day, we came down to $7.31, and then we got bought up over $8. We got validated as a support here, validated as a support here. So much supply here, and this has also acted as a previous resistance for the stock. So that $8 level, or let's call it $7.75 level, is going to be the one to watch for Shift Technologies. So SFT support to watch next week is going to be $7.75, and the resistance it needs to break out of is going to be this level right here. So close to, I want to say, 977 or 960 levels. So kind of like here, because that's the level that we have consistently been finding resistance at, right? So we're just getting rejected at that level multiple times. It's trading in a horizontal pattern, so it's just trading sideways. So if you were to kind of notice this pattern, we're just going in a sideways pattern, right? We're just boom, boom, boom. We're just range bound right now. And if it does continue to trade in between this range, I could see a potential breakout to the upside if the overall market changes and the earnings are also coming up for Shift. So that would be be something to watch as well for Shift Technologies. Yeah, Apple, we also discussed that with Daniel Ives from Wedbush Securities. Apple's pricing in India, Apple's move manufacturing in India as well. So let's take a look at NMDM, Nano Dimensions for Rodrigo. Again, this is a stock that I have analyzed in the past as well. The trend has shifted, similar to NIO, right? It's trading below the moving averages. We're seeing a lot of weakness. The RSI, the MACD, no doubt, is incredibly oversold. The RSI trading as low as 28, and the MACD also aggressively selling off as well. Do they have earnings coming up? Rodrigo, do they have earnings coming up? Do you know if they have? Are they reporting anytime soon? But this right here are going to be two support levels to watch for Nano Dimensions. The first one at $6, so that's going to be the level which has been validated in the past. So a lot of support at that level here coming in from December 2020. We validated that support. And then the resistance that it needs to break out of is going to be sitting roughly at $10.60 or maybe like $11. Although there is going to be another resistance at close to, I want to say, $7.90. That's going to be a more near-term resistance. Because again, you guys will notice that previous resistance here, which when we broke out, so previous resistance, we came back down, validated that support, pushed up, broke out, back tested at old resistance as a new support here. So that again was acting as a really strong support for NMDM at close to $7.95 or close to $8 per share. So moving forward for NMDM, keep a close eye at $6.12 or $6, I should say. So $6 as the new support, and the resistance at close to $7.95. And if you do see a breakout over $7.95, then it really opens the pattern up to retrade as high as $11. So that right there will be the level to watch, kind of like here, because once it breaks out, I don't see a resistance as high as $11. And that's going to be the level, kind of coupled with that moving averages, the 21 EMA and the 50 EMA, and also considering such a strong oversold level for the MACD and the RSI, so I could see some consolidation sideways, right? And this was also kind of like an inverted hammer candle, so could see some trend reversals. Again, depends on the Nasdaq as well. But $6 would be the support level to watch, and $7.95, close to $8 as the next resistance. Sandeep, that's a great question. So talking about SQQQs, and for those of you who are not aware, these are like inverse levered ETFs. or ETNs, so to speak. So they don't have really any holdings. So if you were to go over and type in SQQQ holdings, they don't have individual stocks in them, right? They're not determined by demand and supply metrics, but instead only their derivatives, meaning they're deriving their values from an underlying index. In this case, it's going to be NASDAQ and QQQs. That's going to be the ETF that we talked about. So for QQQ, Sandeep, it's a great question. Now, if you do see a breakdown below 297, that's the support that we have talked about. If you do see a breakdown below 297 for the Qs next week, then we can make an argument that yes, SQs can really push up higher, maybe even reach as high as of $19 per share. So that would be kind of like the level to watch, as high as $19. Again, there's no certainty if we are going to see a push higher, because similar to when we saw the Qs push up. So if I were to bring up the Qs on the daily chart, you guys will notice a massive you guys will notice a long wick, right? So this right here is a long wick for the Qs on Friday. So that right there is what we're talking about. And the same thing happened for the inverse, right? That's going to be the SQs. We were trading all the way as high as $17. We got rejected and then sold off all the way to lows of $15 per share, even though it was green. Actually, it was red, so it was down a little bit over 4.5%. So there was a lot of weakness coming in for the SQs, and there was a lot of buying pressure coming in for the Qs. So again, it's a little bit tricky of a situation, and talking about SQQQs, it sees that spike once in a long time, right? We've seen that coming in from like September 2020. This right here was a spike in November, October. We spiked close to 50%. We spiked close to 34%, and this right here is a spike from $11 close to 42%. So even though these moves may seem smaller, they're probably the same amount in terms of the percentage gains. So I could maybe in a worst case scenario, if the NASDAQ continues to drop, see the SQs maybe retest highs of $19, jump over 62%, and then consolidate and then sell off further. And if you were to look at the pandemic, let's take a look at where the pandemic was for this thing. So let's go over to the 4-hour chart for this. Was this the pandemic here? Oh yeah, this was. So this was the spike for the SQs, right? So coming in from like February of 2020 when it was trading at $78, and they do like a lot of reverse splits as well. So these are prices that not necessarily are right, but it was up over 127%, trading all the way as 179, right? So absolutely crazy. William, I've posted a video on NIO, and we've also covered NIO stock as well. Sean, yeah, please make sure that you do your analysis on that as well. These plays are actually really, really risky. SQs, they're highly levered. They're not recommended for long-term investments anyway. So, and they're very aggressive in terms of volatility as well, right? So they basically are leveraged. So their beta is like 3 times, 4 times higher than relative to the S&P 500, the NASDAQ, and some of those underlying indices. Futures are down. Yes, futures are down. Let's take a look at the NASDAQ. We're getting up a little bit. So we're down just about 91 basis points. Yeah, I mean, they do, in my opinion, they do care about fundamentals in this decade, because that's what's driving the markets lower, is fundamentals and valuations, right? We are seeing a pullback because of valuations and the fundamentals. And then the S&P 500 futures down about 28 basis points as well. So it's looking like a potential red start to, like a small red start to the week. Let's talk about BNGO for bio-nanogenomics. It's also a stock that we have covered previously on the channel as well. A lot of buying pressure coming in for bio-nanogenomics. We closed above that $7, I want to say, $7.15 support. Where did we close? We closed at $7.15, so exactly at that level, at close to $7.15. So that right there would be the support level to watch starting tomorrow. For everyone who's asking about bio-nanogenomics, Banu, yes, BNGO, this is right here is going to be the support level to watch at $7, close to $7.15, $7 level, and the resistance it needs to break out of is going to be this level right here. Let's see. It's going to be close to about $8.55 because that's the level that we have gone rejected. That's where the 50 EMA is going to be sitting as well. So we're gonna add bionanogenomics here, BNGO. It's kind of a tough name. I just feel like. All right. So support is gonna be sitting at $7, and resistance is gonna be sitting at close to 855. That's the level to watch. All right, let's take a look at if there's anything going on Bloomberg. Let's take a look at how many people we have watching as well. They're talking about crude oil.
To remember that was an important moment for the way that Gulf countries dealt with Iran, sort of led to a recalibration.
So let's listen to oil for a second, because that's going to determine where the energy goes.
So a little hard to say exactly where this goes next at the moment, despite the fact that Houthi rebels have claimed responsibility for this attack. Saudi Arabia very much pointing the finger at Iran.
Simone, thank you for that. Simone Foxman at the Qatar Financial Center in Doha. I mean, I recall my time in Saudi Arabia around September, October 2019, the last time.
So Brent now trading is at $70.84. It's going to be the ICE Brent crude oil. All right, so we have 1271 people watching. Guys, we 100 likes away from 1,000. So make sure that you drop a like, subscribe if you're new to the channel. Again, I really, really appreciate each and every one of you guys and your support. If you want to get access to our TradingView chart, so this right here again is going to be accessible to everybody if you are part of our Patreon. So the link is going to be down in the description below. You'll get access to my TradingView charts, get access to our Discord. I will be posting like support resistance levels over there every morning, and we do a lot of briefings, we do a lot of analysis and talk about the markets and talk about different opportunities. And then of course you'll get access to our growth portfolio as well, which we just started in February. So the markets are down and that portfolio is down a lot because of how growth aggressive it is. We have 4 positions in that portfolio, and I'm going to continue to grow and add more questions as well. Yeah, so the more important question is where the markets goes intraday tomorrow, right? So that's going to be very, very important. Even though we are gapping down, doesn't necessarily mean that we're going to end the day red, right? We could very easily see that from Friday's momentum. We were down a lot, and then the markets basically, or the buyers stepped in and the bulls stepped in to push us higher once again. So guys, let's make sure that we keep the chat civil, all right? I'm seeing a lot of conversations here that are going on, and it's basically asking me to approve these messages. So if that's happening, that means there's a lot of words that YouTube is identifying that you guys are saying at each other. So all right, so let's talk about this. Where do you guys think about in 2021? Where do you see this going? Noel, thank you so much. I really appreciate that. Thank you so much for dropping that like button. Really, really appreciate that. Discord is just like a messaging app that we use to talk to other members that are part of it. We have a little bit over 1,500 members in our Discord, and we have a little bit over 230 members of our private Patreon group as well. That if you guys want to get access to it, definitely check out the link down in the description below. PayPal, let's talk about PayPal. That's a great suggestion, Vijay, so thank you. So PayPal definitely selling off aggressively with cryptos, with the broader market. So NASDAQ getting hit harder. I feel like there's going to be so 280, 248, I'll go ahead and turn that into a next resistance that we need to watch. So 248 is going to be the next resistance. We have gone rejected. So let's go over to the 4-hour chart. For PayPal, you'll notice that we have consistently gone rejected at that level. So once here, twice here, even as high as $256. And this again was acting as a previous support. So let me go ahead and explain what levels we're watching. So right here, 248 resistance in December. January 14th, resistance, another resistance at 248, which turned into a support, Sal, you get this chart. There should be a link in the Patreon. If you are part of it, there should be 3 links, and you should be able to get access to my main chart. So these are all the charts that I have, but I have shared the main chart, I've shared the white chart, and I've shared chart number 2. All these are going to be available to you guys with the analysis, with these price targets. If you want to join our Patreon, again, you'll get access to the charts if you were to join the Patreon. So the link should be down in the description below. But $248 is going to be the next resistance, all the way as 256. So that's going to be 2 levels to watch for PayPal. In fact, during this sell-off, I did add more to my position in PayPal. I am going to consistently be adding more because digital wallets is going to be huge for the company. Digitization of finance, cryptos, they're all going to be incredibly important, in my opinion, for the company, for PayPal as well in the future. So $248 all the way as 256. And in terms of its support, we're going to be watching this level right here. Close to 225. So 225 would be the first level of support for PayPal. If it does retest that level again sometime next week or over the next few weeks, I will be more inclined to adding some more to my position at that level for PayPal. And all the way as low as $215 per share. So that's going to be this level. It's been kind of consolidating at that level for a really long time, right? So this is coming in from September. We got rejected. We got rejected in October. We got rejected here in December. So a lot of rejection for PayPal at close to $215. So that's going to be the level to watch. So 2 support levels. For everyone who's joining in, these are the levels that we have, or the companies or the stocks that we've already talked about. So actually, let me go ahead and put this 225. So we've talked about the Qs, we've talked about QQQs, we talked about Square, we talked about Apple, NIO, Palantir, Riot, Tesla, Nvidia, AMD, Shift Technologies, NNDM, BNGO, and PayPal. So if you guys were to go back on the live stream, you guys will be able to see that, or this right here is going to quick reference to where the support and resistance levels are going to be, in my opinion, for these stocks going into next week. So very, very important stuff. Let's talk about Shopify. Alex, that's a great suggestion. Thank you for bringing that up. So Shopify as well. This is a company that I'm looking forward to kind of starting out a new position in. Anything under $1,000, although I did miss almost that opportunity at $1,021. But if it does retest that level again, I will be more inclined to maybe starting that new position in there as well. But for Shopify right now, the resistance that we need to see is going to be at 1135, although it does look like we broke out of that level. After hours. So after hours, that right small candle, I don't know if you guys can actually see that. This right here was the 4-hour candle right here. So let me go ahead and delete this for a second. So that candle right here breaking out of 1135, that is the resistance. But we'll keep that intact for now. And the reason is because it still needs to open and trade above that level, and with where the NASDAQ is trading right now, it's kind of a tough situation where the markets are going to open. Alan, we covered Palantir. So Palantir, you guys should be able to go back and check out the analysis for Palantir. We covered that as well. So that right there, resistance for Shopify at 1135, that it needs to break out of, kind of consolidate a little bit. And then the support is going to be sitting at close to 1011, 1020 levels, something that we have also discussed in the past, previous support a couple times for Shopify. And then of course, if you were to go over to the daily chart, another huge inverted hammer candle, a lot of support coming in from that 200 simple moving average. Peyton, what's up? I am getting some rest. Yes, I am. It's been a crazy past few weeks, right? I mean, if you guys were to look at yourself, like the past couple of weeks and even the past month, like February has been absolutely insane. And I was talking about how long it just felt like the whole month was. We had a lot of live streams, we had a lot of videos, we had a lot of craziness going on in the markets. So, but it's looking like it's not going to end. It's looking like we're going to potentially see another week of pain, because the NASDAQ futures are just really reluctant to stay green. It's down about 80 basis points as of the time of this video. and then the S&P 500 futures are also down about 17 basis points as of the time of this video, although we are pushing up a little bit. So the Nasdaq was down over 1%, and the S&P was down over 30 basis points, so we are getting bought up a little bit right now. But for Shopify, keep a close eye at $1,013, $1,011 per share. Support is going to sit at 1,000, I want to say 11, let's call it 1,010, and the resistance is going to stay put at 1135 for tomorrow. So we'll see if we open higher or lower than that level, because that's going to be really, really important. If you open higher, then that can potentially act as a support. If you open lower, then we're going to struggle to break out of that level, because even on the day, you guys will notice the high was 1154, but we ended up closing at 1131. So we did kind of sell off. The bears kind of stepped in at that resistance as well for Shopify. All right, so talk about some other stocks. Let's see if there's anything that's going on in Bloomberg. Again, they're talking about the oil. All right, so let's talk about this chart really quickly. You guys know that this right here, the top one, the blue line, is going to be XLE. That's going to be energy. And the next one is financials. Right now up 38%, right now up 21%. Let's look at year to date. So this is where the year started. Actually, no. Let's go over a little bit more. All right, so January 4th. This is where the year started. So boom, right there. So yeah, so this is where the year started. Year to date, we are up. So January 4th, 2021, you guys will notice energy up over 38%, financials up over 15. Where do you see it going? Just think about it as a race. Year to date, we're talking December 2021. Which sectors do you think kind of leading up, or which sectors do you guys see kind of like pulling back, right? What is going to basically be up by the end of this year? Or do you think energy and financials are going to continue to push up higher? Or if we're going to see other sectors kind of push up and take the lead? So we're talking consumer staples, we're talking materials. Jeff, yes, I've done NIO like a million times. So please make sure that you guys go back to the live stream, watch that, and then jump over to the live stream here. But let's talk about these sectors, right? Do you guys see energy financials kind of leading 2021? Or do you think that other sectors like industrial, utilities, tech more specifically, maybe, pushing higher as well? So we're pushing higher. So we'll see. It's going to be an interesting chart. It's going to be a really, really interesting race here between all these different sectors. Thoughts on AMD? We've covered AMD as well. We've covered a lot of different stocks. We've covered SPY as well. So I would highly encourage you guys to watch that too. Alright guys, so I'm actually gonna take a break, and then maybe I'll do a live stream when the markets are open. We have a little bit over 1,200 people watching, so again, thank you so much for joining in. Maybe we can stick around for maybe another 10-15 minutes and talk about some other stocks as well. So, alright, let's take a look at Plug Power. Alright, let's take a look at Plug Power, and Plug was down a little bit over 1.8% as of the most recent close. But we still kind of validated that $37.80, $38 level. So you'll notice that right there is going to be the support level for Plug Power, validated here. This right here, previous resistance for Plug at close to $37.81 or $38 per share. So that right there would be the level to watch. And it has a very similar pattern than Nano Dimensions. So Nano and Plug Power have a very similar pattern. If they have been selling off consistently, making lower highs, lower lows, and there's been a lot of weakness for these charts. So it needs to break out over 47.75, I should say. And we actually came back down to fill this gap, right? So Plug Power actually left a huge gap after it gapped up here. So there was a massive gap, which we filled, which we now perfectly filled. So that's good. Patterns, when they usually gap up or gap down, they usually go back up or come back down to fill those gaps before pushing higher. Wall Streeter, thank you so much. I really appreciate that comment. So $37.80, $37 or $30 per share is going to be the next support to watch for Plug. So $37.75, call it, and then resistance Ooh, DraftKings is a great one, Larry. Thank you so much for suggesting. I'll go over that in just a second. And then 47 or 47.75 is going to be the next resistance to watch for Plug Power. And in my opinion, you know, if the Nasdaq consolidates sideways, and if we do see any type of a horizontal pattern and a push higher for the Nasdaq, then I do fully expect all these support levels to get validated tomorrow. Like I do fully expect, if we do see any type of a recovery, for Plug Power to validate 37.75 and then push up higher to maybe retest 47.75. That's going to be aligned with those moving averages, the 21 EMA and the 50 EMA. You guys will notice that we even came back up, right? So we sold off all the way down here. We pushed up to retest that resistance. We got rejected to sell off even further. So that right there is going to be the next resistance to watch for Plug Power moving forward. Let's go over to DraftKings. DraftKings, another stock that, you know, has a lot of huge potential in the future. There's a strong support at $55 or $54.99, you know, inside that green rectangle, so to speak. So that right there is going to be the level to watch for DraftKings, which has previously acted as a resistance. We got rejected. So if I were to kind of highlight that, yes, so that summary, I'll basically post that on Discord. So I'll put that on the Discord channel. I'll put all these levels. So if you guys didn't get a chance to watch this, I will put a level. I'll basically put all these levels. I'll talk about, you know, what we're seeing in the markets, give you guys a little bit of a briefing to start off the next week. So if you want to join the Discord link, it should also be kind of aligned with that Patreon link. So if you want to join that as well, the link is going to be down in the description below. So for DraftKings, we're going to be watching support at close to $54.75 or close to $55 per share, and the resistance is going to stay put at $65. That's the resistance for DraftKings. We're still consolidating sideways here. This is a previous resistance which has gone validated, and again, so much buying pressure coming in, right? Like, think about this volatility. Like, it was trading as low as $54.35 only to get bought up as $59.52. So a lot of bulls stepping in. The volume was much higher. So, you know, I fully expect the markets to see some type of a recovery, at least a little bit of consolidation sideways. Maybe not a recovery back to new all-time highs, but maybe like a consolidation sideways. That's what we want. That's like stage one for a recovery, is like after selling, after having this aggressive sell-off and exhausting and absorbing all this pressure, then we need to have like a consolidation sideways for these prices to move in a range and then break out over those resistance levels as well. So, all right, that's going to be DraftKings right there. I'm going to break some more stocks really quickly. Daniel, thank you so much. I really appreciate that. Thanks again. So DocuSign, I don't think I've covered DocuSign in a while, or maybe I don't think I haven't at all. So this right here is going to be DocuSign. Let me take a look. So we've been making higher highs, higher lows, but there's been a really strong horizontal support for DocuSign. In fact, I mean, it's down quite a bit from all-time highs. So over 31%. So the R side, the MACD, again, coming down aggressively, and they are reporting their earnings, right? So they're reporting on Thursday. So this right here is Thursday. They're reporting after the market's closed on DocuSign. So very excited about that. So the support to watch, again, the R side coming down aggressively, right? Coming to an oversold level. The MACD has been selling off as well. So keep a close eye at this support at close to 186 or 187, I should say, because that is the support level that we have validated several times. Here in August of 2020, this right here was another validation. Going back, let's see, as far as September 2020, this right here another time in June and July of 2020. This right here another time in November. So there's a lot of demand at that level for DocuSign. So there's so much demand at that level for the stock. So that would be the support level I would watch going into next week for DocuSign. And even today, like even the most recent close, you guys will notice that we were trading as low as 188, and then we got bought up to over $204 per share, right? So a lot of momentum for that as well. And then keep a close eye at these higher highs that has been making. That's interesting because it's a really weird pattern. It's not like a descending triangle. It's not like a horizontal pattern. It's been making higher highs and a horizontal pattern. It's like very interesting. So that right there would be the support level. Wait for some consolidation sideways for the RSI and the MACD. And then in terms of a resistance, you know, it looks like every time we have pushed up, we have retraced back to this higher high. So let me take a look at some of the horizontal ones. Maybe keep a close eye at $219, $220 as a resistance, and the reason is, so right here, close to $219, $220. And the reason is because that has previously acted as a resistance here, so we got rejected, and then that in turn became a support more recently here. So again, all resistance level acting as a new support here, potentially acting as some type of a resistance as well for DocuSign moving forward. So we're going to go ahead and put that on the list. Support at 187, and resistance at $219. All right, let's take a look at how many people we have watching. So 1,100. All right, guys. So I think it's been over 2 hours. I'll do another live stream during market open. But again, if you guys want to get access to our Patreon, if you want to get access to our Discord, TradingView charts, again, these all charts are going to automatically sync every time I make changes, right? So it's really interesting. You guys will be able to see the analysis, go over different tickers and stocks. And as this chart kind of grows, as more and more stocks we analyze, all those levels will automatically sync as well. So the Patreon link, again, is going to be down in the description below. I really do appreciate you guys' support. Thank you for joining in. Right now, to give you guys a very quick update, the NASDAQ futures are down a little bit over 82 basis points. So we are seeing a little bit of a push higher. We'll see how the market reacts to that pre-market and where it opens tomorrow. The S&P 500 futures also down about 18 basis points. So Luna, the way you get that chart is if you were to join in through the Patreon. So everyone has links to my charts, which automatically sync every time you join. So you'll be able to get that analyses as well and the different support and resistance levels. So thank you so much for joining in. Again, it's not an indication of where the market's going to potentially open because a lot changes in overnight trading sessions. Right now it's at 11:45 p.m. Eastern. So very excited to find out how the markets behave. To give you guys a very quick update, the S&P 500 and the NASDAQ, we need to be cautiously optimistic, meaning that there could potentially be some more downside and some more pain left in the markets. And the S&P, I could see it retesting 3,500, and the NASDAQ, the worst case scenario target is going to be 11,800. Doesn't necessarily mean that we're going to see that low, but that's something that we can expect and manage our risk accordingly for that. And then for SPY, watch what is it? For SPY, watch $380 as the next support, and then SPY support is going to be 380, and the resistance is going to be at 385. And then all these are going to be posted on the Discord very shortly with my market briefing and a summary of what we discussed. So again, thank you so much for joining in, you guys. I really appreciate you guys, and hope you guys have a great day, great evening. And I hope you guys enjoy, and potentially the markets will recover soon. May not be tomorrow, may not be next week, but they will eventually, in my strong opinion, will recover. So again, thank you so much for joining in. I really appreciate you. Make sure that you drop a like. It really helps out with the channel. We are over 1,100 likes. So again, thank you so much for joining, and I will see you guys in the next video.